Tuesday, January 28th, market analysis. Stan Ehrlich. Good morning, 10:02 California time. Well, yesterday was a huge down day, but the market managed to come back approximately halfway in the middle of the range of yesterday, but it did leave a large gap behind in most cases, not all of them. The stock market indexes is what I start out with always and go to futures markets and occasionally other topics. For the moment, we have a gap to close above the high of Monday and below the low of Friday, right in here. So a rally up to 61.21, give or take a little, the low of Friday, would not be unexpected at all if it can do that to begin with. And we seem to be on our way, but I'm a little skeptical it's going to manage to close the gap. It might close part of it, but I don't have a lot of faith in it following through to new historical highs right away. I think we have a double top in the making. It won't be an official breakout of the double top until you start to close below 58.08 or so. Well, to be a little more exact, the specific low is 58.09, which was the low on January 13th. That's the downside breakout of a double top if we do not make higher highs, or if it's a tiny bit higher highs, and basically it doesn't violate by a long, big, huge rally, the 61.80 level, which it got very close to, overbought, resistance, and then kaboom Monday. So we're coming back a little. We're up 4.5, not bad, or 45 if you want to call it that, equivalent to about 4.5 on the SPY. And let's look at the 5-minute chart. Rallying high and last at the moment, but again, very skeptical overall about all of the indexes having any major move up at the moment. I am looking for some more weakness in at least the lows of yesterday to be challenged and probably broken. So we'll see how that pans out. The low, the rally in the spider, because it's a much, much, much bigger gap than the ES, which is a fairly rare gap to begin with. Half of it's closed, and it's actually closing a little bit more of an older gap from 4 or 5 days ago. So now with the spider, if it can get up to 605, give or take a little, that would do the job, probably, but the gap isn't really closed until you get up to the low of Friday, and that was 606.80. Okay, and this is happening after the spider has made new historical highs on Thursday and Friday. So it's a double top that's a little bit more noticeable or accurate, if you will. But again, there's no downside breakout. This is not a completed pattern by any stretch of the imagination until you get down below 575.5-ish. Then we're looking for a spider SPY downside objective in the ballpark of 543, 542.80. Next, spider 5-minute chart, climbing, still got a little ways to go to finish the gap. It's very important as to what happens when it gets up to, and if it can get as high as the gap closure prices. And we're looking at the gap closure in progress for the QQQ. But again, I'm just as skeptical about the Qs. It potentially has a double top, but I also have to point out something else. I'm concerned that the high that we made on November 11/11/24 with a bearish engulfing AR sale signal, it worked out okay for several days. It is the first shoulder on a head of the formation, which would be December 16th, and the last shoulder high was last week. The pattern is slightly upward slanted, and I'll draw in right away here the neckline on this QQQ possible head and shoulder top. So that's the neckline. And if we continue to get lower than yesterday's lows, I'll make the measurements and give you a downside forecast, which is going to be fairly substantial, back down to approximately the September levels, or maybe 460 is pretty much in the ballpark, 470, 460, something like that. Next, QQQ 5-minute, and on its way up momentarily. We'll see what it can do about the gap closures and the NASDAQ futures. Like the E-mini, has a small gap yesterday morning over the weekend, opening below Friday's low, and we're on the way up to maybe closing the gap. Now, this head and shoulder top is a little bit more obvious. We did have a sell signal on the first shoulder high. That's great. It made a good move down. We got overbought, and that's the head lift formation again, December 16. And the last shoulder high was a little 3-day period, Wednesday, Thursday, Friday last week. Neckline is almost flat, slightly upward slanted, and we came very close yesterday on the break low early in the day to touching that line and even maybe breaking it, but it bounced back pretty good, sort of. It was a big down day overall, but not anywhere near as bad as if it had closed on its lows. So we're bouncing a little. Not really surprising. It's how much and for how long that's important here. And when, if I'm right, are we going to start making lows lower than for yesterday's lows? And that is probably going to be the day the market breaks out of this formation, which has an objective of a little bit below 19,000. Yeah, that's good. And the 5-minute chart of the NASDAQ going up a bit. So what about the Russell? I meant the YM, the Dow, sorry. It's another new high for this rally, but getting more and more overbought, and now at 80, which is pretty substantially overbought, well above my threshold of 75 for point blank being overbought, so to speak. So it's now in its fifth day. And at any time now, I'm expecting it to start to head south. I thought yesterday was going to do the job, but it closed higher. Wow, what a comeback, huh? So now above the old bull trend line, the bottom of an upward slanting channel, we're back into that channel. Maybe this will rally a little bit more and end up with a double top in the next couple days, but it's overbought, approaching previous highs, resistance areas. I don't have a lot of faith in this rally continuing much more. And we're just simply looking at the YM 5-minute chart with minor new highs, and it's climbing. Okay, Russell. Had a new low yesterday for the previous 4 days. Not that big a deal, but it's come down out of a major resistance area and also touching a minor resistance area inside the big one. So we're still a little lower on the day at the moment, not much. And we almost made a lower low today than yesterday's low, not quite. So it's a doji with a slightly lower current quote. And here's your 5-minute data for the Russell 500. 2000, sorry, Russell 2000. Yeah, I'm sorry, S&P 500. So bonds are holding at the neckline. Now, it is a modest to small, medium size or so, 1 month, head and shoulder bottom, which broke out of the neckline in a relatively classic manner yesterday, closing well above the line. We now have a minimum upside objective until proven otherwise of about 117.17 or higher. This is extremely important because if this works and today's low is not a problem, it's right about on the neckline, and we are hovering a little bit above the neckline. As long as you don't close below the neckline, it's supposed to be okay, and then turn around and start to rally. We are still long from the bottom of the market, the exact low day on January 14th. We had an ER buy signal, a green bar. We also had a green bar on the shoulder low on the left to December 26th. Unfortunately, not a few days ago, which was the last shoulder low. My timing was for today to be the lowest low for the shoulder, but it was 2 days earlier last Friday, which is good enough timing wise, and the price level a little tiny bit lower than the first shoulder over here again around 1226, 1227. So everything's okay. Timing is okay, not perfect. Price levels are a little bit lower, not perfect, but that's very normal. Neckline broken in a classic fashion. Now we're testing it. So it's supposed to hold right about here, period. In fact, if one was inclined, and not official recommendation by any means, you would consider to go long in the ballpark price of where we are, and using a protective stop relatively close, just probably not too far under today's low. Risk relatively small, upside objective if it's you're going to hold it for a couple 2 to 4 weeks, might be all the way up to that objective of 17. So that's about 3 to 4 points. Next chart, 10-year notes. Closed on the neckline yesterday, did not break out. It tried to. And today, even the high is under or on the neckline, and it's trading a little bit below it. Not much. So it would be easy for it to break through and have a breakout, which bonds already did. So we're a day late, maybe, or two for a breakout in notes, relatively speaking. If notes go down more, it probably pull the bonds down, and vice versa could happen. The bonds could go up, like I told you, and break out for the notes on the upside as well. So we're at the very beginnings of the upside objectives for notes and bonds. I just need to close above that neckline in the notes. Looking at crude oil, we came down to that support line yesterday, and it's a doji today. We're holding at the line. We're not oversold. All I got is a little bit of support and a trend line, so it could still slip some more. I'm not saying I'm real fond of it turning around immediately, although there's a chance of that. But I think there's not the greatest odds. I frankly think there's a good chance of it coming down to 69.77-ish. That looks like the best significant support area, and if it gets down there, we'll probably be oversold at the same time. And what about heating oil? Has broken the line, same relatively speaking line, and is on its way down and not quite oversold. And I think it could get back into the support area down to about 2.27, something like that, and then maybe oversold and turn up. Basically, I'm looking for energies to start to rally again. Back to crude for a second. You know, it just finished making new highs since last March in crude. Not quite as good, but pretty good. June came close to the highs back in June. Certainly, that's several months. So I'm friendly, bullish on the energies. Well, what about the natural gas? It seems to have a little toppy pattern here. There's a chance that this could be a fairly sharply upward slanted neckline, and you have a shoulder high here on December 30th, the top of the market January 13th, and the last shoulder just last week. So we're breaking out today, and if that's true, the downside objective I'm going to measure from the highest high. This is how it's done. And on the same vertical axis, you're going to stop at the neckline. So that's the depth of the formation. You grab the line, and the day that it breaks out, which is today basically, you measure down from that price level, which happens to be today's high. So far, it's a classic downside breakout. You have a downside objective of about 2.4, and that's back to support. And almost assuredly, it would be oversold if it can get there relatively quickly. So that's my opinion on natural gas. It should be on its way down. That doesn't match very well with my comments on crude and heat. So we'll see about this potential conflict. We'll see what happens. Next, gold, silver, platinum, copper, and the grains and some meats. Now, gold got overbought Friday, came down a chunk yesterday, bouncing back a little today. I like this breakout to the upside about 2 weeks ago. We simply followed through, got close to previous highs, got overbought, and had a little correction yesterday. I'm still bullish. I still think this is going to start to make new highs pretty soon. But there is nothing really wrong with it dipping back down to, I don't know, 2690, 90 flat, maybe 95, 2690, 27, and then turning back up. So I'm definitely bullish on gold, but it could fiddle around in here a little bit before it starts to make new highs or start to make new highs right away. Silver, same kind of comment, maybe dipping a little bit more. It's already touched support, but it didn't get oversold. So I like what I see. I'm just trying to peg the turning point or the beginning of the move up again. And platinum, basically same kind of comment here as well. Although platinum has a gigantic, super big, major, large support area, it bottomed out in just a month ago. Well, actually, the beginning of this month, December 31st and January 2nd. So new highs for about a month plus, then a little retracement back into support. And I think that more likely than not, it's on its way sideways to higher. So I'm looking for a new high soon. It could dribble down a little bit more once again, but it's hard to tell at the moment. So there you go. Now, copper. We were short. We made a good trade. We got out last week. It's made a minor new low for the move now. We're not short anymore, but I had a good trade. No crying over spilt milk. It made money, so that's the important thing. Now we're bouncing a little today. I still think it's on its way down. We're nowhere near oversold. It could very well come down to 4.08 again, the significant support area. And what about beans, oil, meal, corn, wheat? Remember, I'm trying to justify a long-term bottom formation in the grains in general. Wheat's come close so far to breaking that formation, the support. So we'll see about that in a minute. So far, we're basically unchanged on soybeans. Doji, almost exactly the same range today as yesterday, but at a little bit of support. And I think that the grain complex could start moving its way up very soon. I have to allow for a little bit more of a dip, but I'm still looking for higher levels. Next is a minor rally this morning with a current tick a little bit lower on soybean oil. It's bouncing off of support, but again, we're kind of between a little bit of a rock and a hard spot. I would accept minor new lows, a little bit of a dip into support, but it could just simply start to work its way higher. I can't really come up with a great comment here in the grain markets momentarily, except for a generalized, I like what I see, and I'm looking for higher levels soon. And what about soybean meal? Well, support yesterday and today seems to be holding. We're now higher by $1.70 and could have a bullish engulfing, but we're not oversold, so we're not going to get a buy signal. But it's nice to have a bullish signal or a candlestick, which would be the bullish engulfing, but it's not there yet. We got to get over yesterday's high. But this is a triple bottom major support area that so far is hanging in there. I need closing prices above 321.40-ish in order to get very excited about the long-term bull market again. And corn, we've got corn market getting to its minimum upside objective, which is really great last week. The pattern has completed itself. We have the head and shoulder. It worked great, past tense. Now it slipped back to a little support, and we're popping our way right back up again. Again, these head and shoulder objectives or pattern objectives in general are always minimum objectives. We could see it go up a lot more. Wheat. Well, okay, good. We're rallying 8.25 at the moment and above yesterday's high, so it survived the little dip we've had for a few days around support. Now I want to see it start to close above 566.5, call it 567, would do me some good here. I hope it does that in the next week or two. Yeah, coming around a little bit. I like that. Okay, what about cattle? Well, again, I'm making a joke here, but I might have to turn into a vegetarian. This thing won't stop rallying. It is at 86, extremely high on the RSI index. Highly likely to turn around at any moment. I wasn't expecting it to get this strong this fast in the first place, but now that it's done it and it's here, all I can say is this is dangerous territory for holding long positions. Good opportunity if you can detect the beginning of the downturn to get short or exit longs if you have them. Okay, looking for a top in cattle. Miss Piggy is right up against a resistance level, which is the neckline the second time. This is okay, although a double test of the neckline is not all that common. There's nothing wrong with it. So I'm expecting it to fall apart starting right about here and make new lows to the move. The downside objective is 81.65-ish. It's well on its way, supposedly, but again, it's a little unusual for the second test of the neckline, so we'll see what happens. And we've got XYZ, used to be SQ, a stock I've been monitoring for a couple of months plus now. Yeah, coming up great. It's bounced off a support line in a support area. A couple of weeks ago, we had almost oversold at the bottom of the support area. I like what I see. I just need to see more upside continuation above 90.70-ish. And I would like that very, very much. We are looking at a huge 2-year support trading range that it has broken out of back on about November 13th. So it's been now a couple of months that it has mostly been above the support levels, and that's good. And now it's time for it to go sideways a little or straight back up again. Let's see what happens. And we'll check on the E-mini real quick. We're still rallying a little bit. We've got minor new highs here for the last several minutes, and it's getting closer to closing those gaps. You guys have a great day and profitable trading to you.